Okay, if you're even thinking about buying a home in the US, there is one single number that pretty much sets the rules for everything. The kind of loan you can get, your interest rate, even what you can afford. And for 2026, that all-important number is changing. So let's break down exactly what it is and what it really means for your home buying power.
So let's not waste any time. What is this new magic number that's going to define the mortgage world for 2026?
And there it is, $832,750. That's the brand new baseline conforming loan limit. It's a jump of more than $26,000 from last year, and believe me, that has some major implications for what you can buy.
So why do we care so much about this specific number? Well, it all comes down to this invisible line it draws in the sand, separating two very different kinds of home loans, conforming loans and jumbo loans. And being on the right side of that line can save you a whole lot of money.
A conforming loan is basically the workhorse of the U.S. mortgage industry. It's the standard, the bread and butter loan. It's called conforming because it conforms to the rules set by Fannie Mae and Freddie Mac, those giant government-backed companies that buy up most of the mortgages from lenders. And because they'll buy these loans, lenders feel much safer offering them, usually with way better terms.
And the difference is, honestly, it's pretty stark. Staying under that new $832,750 limit keeps you in the comfy conforming lane. That usually means it's easier to get approved, and you lock in a better interest rate. But the second you need to borrow more than that, boom, you're in jumbo territory. And that often means much stricter qualifying terms and higher rates. So this new higher limit is really good news for buyers. It means more homes now fit under those much friendlier conforming rules.
All right, so where does a number like this even come from? It's not just pulled out of thin air. There's actually a very specific formula behind it, and that formula tells a fascinating story about the housing market itself.
At its core, it's actually pretty simple. The conforming loan limit is a direct reflection of U.S. home prices. When the average price of a house goes up, this limit has to go up too. It's designed to make sure that the standard, everyday loan is still useful for the typical homebuyer across the country.
Here's the nitty-gritty. The Federal Housing Finance Agency, or the FHFA, keeps a close eye on home values using something called the House Price Index. This past year, that index went up by exactly 3.26%. And that's it. That exact percentage increase is what they applied to the old limit to get the new one for 2026. It's a direct, transparent calculation.
Now, this year's change makes a whole lot more sense when you put it in context. The way this number has moved over the last couple of decades, well, it really tells the story of the wild ride the U.S. housing market has been on.
Just look at this timeline. For an entire decade after the financial crisis, the limit was totally frozen at $417,000. The market was stagnant. Then, the pandemic boom hit. In 2022 alone, home prices shot up so fast that the limit had to jump by almost $100,000 in a single year. Now, compare that craziness to this year's much more modest increase of about $26,000. It's a really clear signal that while prices are still climbing, the market is finally starting to cool off and find some stability.
Okay, theory is great, but let's get practical. Let's look at the specific numbers you need to know for 2026, because that baseline we've been talking about, that's just the starting point. So for most of the U.S., this is the breakdown. The baseline for a regular single-family home, what they call a one-unit property, is that $832,750 number. But as you can see, if you're buying a multifamily property, the limit goes way up. It's over $1 million for a duplex and all the way up to just over $1.6 million if you're buying a 4-unit building. But you might be thinking, hey, that baseline doesn't even come close to buying a house where I live. Well, the system has an answer for that. For specially designated high-cost areas, we're talking big cities, expensive coastal markets, there's a whole separate, much higher ceiling.
And here are those numbers. Wow, the absolute ceiling for a single-family home in these pricier markets is going to be just under $1.25 million. And just like before, it scales up from multi-unit properties, topping out at a staggering $2.4 million for a fourplex. This also applies across the board in places like Alaska and Hawaii, just to make sure the whole system is fair to regional price differences.
So let's just boil this all down to the 3 things you really need to remember. First, that new baseline number, $832,750. Got it? Second, this increase is your friend. It gives you more buying power before you have to deal with the tougher rules of a jumbo loan. And finally, the smaller size of this year's jump is actually a good thing. It points to a healthier, more stable, and less frantic housing market ahead.
Which, of course, leaves us with one big critical question. As these loan limits keep rising to chase ever higher home prices, are we actually making the American dream more accessible, or are we just admitting that the dream itself is getting more and more expensive? That, right there, is the real puzzle at the heart of today's housing market.